Welcome to the Wealthfinity channel, where we uncover the unexpected truth behind the world of venture capitalists. In this video, we will explore the motivations, strategies, and impact of venture capital on startups and the wider economy. Join us as we dive deep into the inner workings of this often misunderstood industry and discover what truly drives the decisions made by venture capitalists. Get ready to expand your understanding of the world of finance and discover the unexpected truth behind venture capitalists. Venture capitalists, VCs, are investment professionals who provide funding to startups with high growth potential. They invest in early-stage companies that have the potential to become market leaders in their respective industries. In exchange for their investment, VCs receive equity in the company, meaning they own a piece of the business and share in its profits. What is venture capital? Venture capital is a form of private equity that invests in early-stage companies with high growth potential. VC firms provide financial capital to startups in exchange for equity, typically in the form of preferred stock. This allows startups to raise capital without going public or issuing debt, and it provides VC firms with an opportunity to earn a return on their investment through ownership in the company. As a venture capitalist, your primary role is to identify, evaluate, and invest in startups that have the potential for significant growth. You'll work closely with founders and management teams to help them develop and execute on their business plans, and you'll provide ongoing support to help them overcome obstacles and achieve their goals. Additionally, you'll work with other investors to create syndicates and negotiate terms for investments. Finding the right venture capitalist for your business requires careful research and consideration. Aligning with their investment philosophy, evaluating their track record, considering their network, assessing their level of involvement, and seeking references are all important steps in the process. With the right venture capitalist, you can receive the financial resources and strategic support needed to grow your business and achieve your goals. The role of a venture capitalist. VCs play a vital role in the startup ecosystem by providing startups with the necessary capital, resources, and expertise to scale their businesses. They use their expertise, networks, and resources to help startups navigate the challenges of growing a business. VCs typically look for startups that have a unique product or service, a large market opportunity, and a talented team. They also look for businesses that are scalable and have the potential to become market leaders in their respective industries. VCs usually invest in a variety of stages, from seed funding to late-stage rounds. They work closely with the startups they invest in, providing guidance and mentorship to help the company reach its potential. They also provide access to their network of advisors, industry experts, and potential customers. Qualifications and skills required. To become a venture capitalist, you'll need to have a strong background in finance, business, and technology. A bachelor's degree in a related field is typically required, and many VC firms prefer candidates with an MBA or advanced degree. Additionally, you'll need to have a deep understanding of the startup ecosystem, as well as a network of connections in the industry. In terms of skills, a successful venture capitalist must have excellent analytical and critical thinking skills, as well as strong communication and negotiation skills. You'll also need to be highly knowledgeable about various industries and technologies, and have the ability to quickly evaluate the potential of a startup and its market. Career path. There are several different career paths you can take to become a venture capitalist. Many VCs start their careers in investment banking, private equity, or management consulting. From there, they may transition into a role at a VC firm, either as an associate or a principal. Others may start their own VC firms, either as sole practitioners or as part of a partnership. Regardless of the path you choose, it's important to gain as much experience and knowledge as possible about the startup ecosystem and the investment process. You can do this by reading industry publications, attending conferences and networking events, and connecting with other VCs and entrepreneurs. The benefits of working with a venture capitalist. Working with a VC can bring a number of benefits to startups. In addition to providing capital, VCs offer startups expertise. VCs bring years of experience in building and scaling successful businesses. They can provide startups with valuable insights and guidance on how to navigate the challenges of growing a business. Network. VCs have extensive networks of advisors, industry experts, and potential customers. They can help startups make important connections and find new business opportunities. Resources. VCs have the resources and expertise to help startups scale their businesses. They can provide startups with the support they need to grow and reach their potential. Here are some tips for finding the right venture capitalist for your business. Align with your business goals. It's important to consider a venture capitalist's investment philosophy and focus, as this will determine if their goals align with your business. For example, if your business is focused on sustainability, it makes sense to look for a venture capitalist who shares this value and is interested in investing in environmentally friendly companies. Evaluate their track record. Take a look at the venture capitalist's portfolio and their history of investments. Look for their success rate, the types of companies they have invested in, and their exit strategies. This will give you an idea of their investment style and whether it matches your business goals. Consider their network. Venture capitalists can provide valuable connections and introductions to key industry players, suppliers, and customers. Evaluate the venture capitalist's network to determine if it can benefit your business. Assess their level of involvement. Some venture capitalists prefer to take a hands-off approach, while others want to be more involved in the day-to-day operations of the business. Consider what level of involvement you are comfortable with and look for a venture capitalist who aligns with your preferences. Seek references. Ask for references from other companies that have received funding from the venture capitalist. This will give you an idea of their experience and provide valuable insights into the venture capitalist's investment style and approach. Venture capitalists play a critical role in the startup ecosystem by providing funding, expertise, and resources to startups with high growth potential. If you are a startup founder, working with a VC can be a valuable opportunity to grow your business and reach your potential. In conclusion, the video provides insight into the world of venture capitalism and the role these investors play in funding and growing startups. It highlights the key factors that venture capitalists consider when making investment decisions and the benefits they bring to the table. It is important to understand that while venture capitalists can provide significant support and resources, they also have high expectations for returns on their investments. Ultimately, it is up to each individual entrepreneur to weigh the benefits and risks involved in securing venture capital funding.